What's going on, guys? Brian's here. Today is Wednesday, September 18th, 2024. Welcome to my YouTube channel if you are new here. This is the SPX on the daily time frame. Yesterday, we see that the market retested the all-time highs. In my experience over the years talking to various different traders, I've realized a lot of new traders struggle to establish when is a good time to short the market. People think just because the market is going up, it means you want to short it because it has to go back down. You want to be picky whenever you are going to short, especially if you are a type of person that likes to run call credit spreads. The information in this video also applies to traders who like to buy puts. This is the SPX 15-minute time frame here yesterday. We can see that we did get a nice rejection at the all-time high. It does not always work out perfectly, but yesterday this rejection worked out. I would argue that this is not the ideal place to enter your short. We will get into why a little bit later in this video. This is the SPY on a 3-minute time frame. This is the layout I like to use whenever I'm trying to identify intraday momentum. I have the 9 EMA, which is this blue level here, and then we have VWAP, which is this light gray level right here. This is the 9 EMA VWAP crossover to the downside, and this is the 9 EMA VWAP crossover to the upside. We will discuss this also in a few minutes. But I would like to start here. This was yesterday around 10:15 a.m. Eastern time. And I wanted to make sure not to single out anyone, didn't want anyone to feel bad. And obviously, I'm not going to address anyone in which I've had a one-on-one session with over Zoom while the market was open. I just wanted to warn any trader that was thinking about shorting the market at this point in time, especially if you like to sell call credit spreads. This gamma exposure profile is way too bullish to think about selling call credit spreads because for all we know, the markets could have rallied straight up to 5,700, which is something we have seen happen time and time again when there is this much positive gamma, when there is this much upward momentum. And we can see in the background all these blue spikes here. There's a lot of call activity happening as that is the call volume. This is 30 minutes after the market opened, and at this point, if you are thinking about shorting, this should be your first warning sign of maybe wait for price action to give you some sign of confirmation. In other words, you want to wait for weakness. Weakness can come if these key levels broke down. So this is the SPX right here, pretty much trading around 650, and you want to have some strict rules for yourself. Something like, if the market was to break down below 640, then I will consider shorting. If I was to short below 640, my profit target should be right here, right when the positive gamma turns into negative gamma, and this area here is a transition zone. And this area will also act as some sort of potential support, or price action will be choppy in this area. And maybe you don't want to hold through the chop. So you have to then tell yourself, if I'm going to short from 640 to 625, is that trade worth it for me? As that's maybe only 15 points. Maybe you don't like taking intraday trades that you only think there's less than 20 points. Being able to manage your expectations can help you decide if it is a good trade for you or not. You can also tell yourself you will not short while the market is in positive gamma period. Maybe wait for it to enter this negative gamma zone down here. But then you also have to manage those expectations because you have to tell yourself, if I were to short as the markets entered 620 and below, where is my profit target going to be? 600 is the next high negative gamma node down here. So then you're telling yourself it's a 20-point potential short, but this is where you can't just rely on gamma exposure. So I mentioned here, if the SPX breaches 625, it would be entering the negative gamma territory, and it might be worth consideration. But at that point, the SPX would be in yesterday's demand zone, making it risky. Now, if it breaks the low of day, that could be a trigger to sell calls, and your stop would need to be right over high of day. So what did I mean by that? If we take a look, this is the SPX here. If the SPX was to break down below 625, I'll actually plot this on our chart. This right here is 625. Let's make it exactly 625. There we go. So here's 625. If the SPX was to break down below 625 and it's now in negative gammatory, it's breaking down right into yesterday's demand zone, which makes no sense to short down there because all of this is yesterday's demand. So we're shorting right into this area in which buyers are likely to be waiting to be aggressive, because this is essentially a good deal for the week buying in this area. So this voids or negates this being a good place to take the trade. That's why taking a short trade maybe on the break of low of day is a viable entry, with a stop loss potentially over higher day, depending on what your expectations or how much reward you're looking for. In other words, if you are shorting here and you are expecting 25 points as a profit, then maybe a 25-point stop loss is way too wide, as that is a 1-to-1 risk to reward ratio. And this is where you want to have additional criteria for what are your entries and exits. I proceeded to share this right after for anyone that was not aware of what the all-time high price was. This was before the SPX had hit that level. So this was around 1020, so right around here, just pointing out that this is the level to essentially have on your chart. Now, once we see rejection of this level, you want to wait for signs of weakness. This is your first sign of weakness, as, hey, the market did reject the level. You don't have to predict or even try to predict when something is going to happen. You can wait to see. And that is the important thing when it comes to shorting. You have to be a patient trader, more patient than a person that likes to go long, especially when the current trend is up. We had not seen a red day yet. The market was trending up. So that makes it dangerous to try to be the first person to get ahead of a moving train. To get more nuance with your entries and exits, this is where using a smaller time frame can help. This is the 3-minute time frame for the SPY, because we can use VWAP here, and this is where we can use additional setups for our entries and this is where we can use additional setups for our entries and exits. In this case here, it is a simple 9 EMA VWAP crossover. If you have difficulty reading price action, you are essentially letting it play out. So this is momentum still to the upside. The market is pushing to go higher. You can see signs of weakness here, as look at these rejections on these candlesticks. This is not a good sign if you are a bull, because this is sellers becoming aggressive. Price breaks down. However, there's not a reason to short yet, as price is still holding above VWAP. The 9 EMA, which is this blue level, has not crossed back down below VWAP. So right here is where we actually get the cross. You're essentially waiting for signs of the markets to get heavy. That's one way to think of it. It's almost like there's weight associated with it. Here it's pushing higher, there's weight here, it pulls back down. It tries to push higher, but it's getting heavier and heavier and heavier. It manages to push higher, but then it finally breaks back down. It's showing signs of there's a lot of weight up at this level. There's a lot of supply up here. Then we get the breakdown. This is the first real penetration of VWAP after the morning volatility has died down. And now these are the first few signs of the markets closing below the 9 EMA. So this is a decent amount of time on the 3-minute time frame in which we are closing below the 9 EMA. For your entry, for your trigger mark, you can keep it simple for yourself and just wait for when this happens. Obviously, it's within the greater context of things. This isn't always a setup or a trade that's always going to work out, but the importance is that you're defining rules and creating a system for yourself. You are saying, hey, if we break back down below VWAP and the 9 EMA crosses over VWAP, I can enter in my short trade around here. My stop loss will be maybe above the most recent pivot point. In this case, it's right here. So you're not risking that much. You know exactly what your stop loss is. An entry anywhere in this time frame, there's about 15 minutes to decide if you would like to enter this trade or not. This essentially is your stop loss. And if you are targeting something like yesterday's close, this becomes your reward. This is a decent risk to reward. You're risking maybe $1 to make maybe 2, maybe make 2.5, maybe $3, anywhere between here. An excellent profit target in a case like this is yesterday's close, right with the 2-day anchored VWAP, but the 2-day anchored VWAP is not always going to be there. So to use something a little bit more systemized, this is where we can just say yesterday's close. You are essentially trading the gap fill. And this is exactly what a lot of traders are also thinking, as look at where the first signs of a bounce happened. It was right at yesterday's close. This is just day trading basics. Any experienced day trader or any good day trading book will highlight the concept of the gap fill. If the market gaps up one day and then you see some opening drive momentum here, once that low of day breaks down, there's going to usually be accelerated selling. Look at what happened as soon as the low of day broke. We can see these candles expanded and price went straight down. So this is a quick scalp for micro day traders. Or this is why an hour, 2 hours before price action even does this, I can say something like, if it breaks the low of day, that could be a trigger to sell calls, but your stop would need to be above the high of day. It is a defined place to know when to enter, know where to exit. If you are a swing trader and you enter your short here, you can use the high of day as your stop loss. Even now, as the market has just opened, there are going to be sellers looking to defend this zone here from yesterday. If the SPY can reclaim 564, then all the shorts from up here will be in trouble, as pressure will be added to their positions. And if this higher day breaks, then the market will continue to go higher. Now, today is an FOMC announcement day, so the morning session is likely to be very choppy, which is why I decided to even record this video now. I figured it would be a better use of time than even trying to day trade. This, by the way, is called backside weakness. I have a playlist on shorting. I will leave the link in the description down below. If you are someone that has an affinity for short trades, if you just prefer to be bearish, I highly recommend you watch the playlist, as I've outlined multiple examples when it comes to shorting the markets or even momentum stocks when they are around all-time highs. The same principles apply even if a stock is not at all-time highs. I just like to release these videos around the all-time highs, as this is when I know traders can get themselves in a lot of trouble. Take, for example, a day like today. Imagine being someone shorting just because this was the previous all-time high and the market blows past your short and you're missing out on a really good long opportunity just because you're saying the market keeps going up, it has to come back down. It doesn't have to come back down. It can remain elevated for a few more months before it then decides to pull back. Obviously, it's September. Seasonally, this is not a great time to be bullish. We are also close to general election, which is in November. So for now, I don't expect bulls to be overly aggressive, and this might create some sort of opportunity for bears. Hence the reason why context is important and why it matters here. If you enjoyed this video, leave a comment down below, like it, share it, subscribe to the YouTube channel if you're new here. Link is in the description to the Quant Trading App Discord channel. These gamma exposure charts are coming from the gamma exposure from Quant Trading App. Link is also in the description to Quant Trading App. Thanks for watching, guys, and I'll catch you in the next one.